Hey traders, Raghee here, and in this free recap video we're going to dive into how I take the main sectors, these main sectors here, and tie them back to the broader averages, meaning the S&P, the NASDAQ, and the Dow. Now you might wonder, okay, why not the Russell? And this is an interesting talk we had in the chat room, and why we don't do the Russell in this way is that the Russell is not what's known as a high concentration problem average. And what that means is that there are a small number of sectors and or stocks that make up the weight, the heaviest weighted stocks and sectors of that average. And we have what's known as a high concentration problem in the NASDAQ, we have it in the S&P, and we do have it in the Dow as well. In other words, there's just a handful of stocks really when you look at the percentage of weighting, again, of the stocks and sectors, there's a small percentage of stocks that make up an inordinate amount of weighting in these broader averages. And there are a number of ETFs that are the same way. Just a small number tends to make up most of the ETF as well. Well, that actually, as a trader, works out very, very well for us. I think it's actually an advantage because the Russell has 2,000 names. Obviously, it's the Russell 2000, but those names are all weighted 0.30, 0.20 or less. So there's not a number of handful of stocks that are going to dictate most of the movement. And when it comes to the sectors, the first, second, third, fourth, and I even believe the fifth sector only have about 3 percentage points difference in weighting amongst them. So there's no real leader there. So I like trading the Russell, but the high concentration problem, let's call it the advantage, doesn't quite work the same way. So one of the reasons I like looking at the sectors all the time, but most especially during earnings season, is that specific stocks will certainly affect the broader averages, but they're also going to affect certain sectors. And today we saw that really strongly in the XLF. Now the XLF is a heavily weighted sector within both the Dow and the S&P. So we know that those individual stocks and broadly that sector is going to be carrying or help carry the S&P higher. And certainly those stocks are going to carry the XLF higher, and I mean JP Morgan. Things like, JP Morgan was really the number one name that I had my eye on. It's the number 2 weighted name in this sector. Now, when it comes to sectors, again, you want to know which sectors affect which broader average and in terms of weight. And then during the earnings season, you need to know which stocks are going to make up not only a lot of the sector, but also impact the broader average. Because how many of you saw what happened, and I'm sure many of you did, when Walgreens, WBA, had that big gap down? A lot of you might remember this. And this is a very low weighted name within the Dow. It's about 1.5%, 1.5% of the Dow. Compare that to about 9% of Boeing, right? But we saw what this did to the YM. So even lower weighted names, if they have a significant move, can affect the broader average. And remember, when you're trading stocks and in these futures ETFs and the futures, you're really trading something that's ultimately what I call it's just made up. It's a made up thing. And it's literally made up of stocks. When you're trading futures contracts like the S&P, NASDAQ, Dow, Russell, Nikkei, DAX, you're trading a whole bunch of stocks. And then you're also trading the sectors that a lot of these ETFs are heavily weighted by. So that's why during earnings season, it's most especially important to pivot into this type of mindset and realize on a day like today, yeah, XLF is going to have a pretty big pretty big grip on the market. Not solely, but certainly it's going to have an impact. So we see a gap up like that. It's no surprise that we're seeing strength in things like the Dow and in things like the S&P. So keep that in mind. It's a big reason that we were very hesitant to buy Dow until it sold off a little bit more and until Boeing reached a floor. So we're going to be able to trade more accurately these underlying averages. So just something to think about. We're in earnings season. If you've never looked at it this way before, I like to create layouts like this so I can look at the broader average on the left and then in order the individual stocks. Now, what I'd like to also do, and maybe we'll do this in another video, but what I also like to do is I like to look at a layout like this, where we take the broader average and then break it down to the individual stocks. And maybe next week we'll go ahead and talk about what I do with a layout like this that I call the multi-chart with what I call the JT trend. This is a free tool that we make available to members with the JT trend over top of it, so you can break down the different stocks of a sector or the broader average. Enjoy your weekend. I'll see you next week.